Well, okay. So I said I would put out the scan. I hope everybody had a good weekend, long weekend, and I'll show you what you can do in a very short period of time with the scan and learn how to use the scan. I won't go very in depth into it, but you'll get a better understanding on how to use it. First things first, when you first open, you need to open your platforms, obviously, and yours may look different than this if you're using E-Trade, TD Ameritrade, Tasty Trade, Tasty Work, any of those that are out there. I mean, they're all pretty much the same, but they can look a little bit different as well. But let's just go through. So first thing what I'm looking for is I go try to get it in the easiest possible view. If you use an interactive broker, their Mosaic is quite handy. So we can see here we're looking for anything big. Now if this price off to the right and the yellow highlight was up above our sell limit, we'd be interested in watching that. But you got to watch out for fake outs. But we usually wait until just before the market open. Now this one won't really matter to people that are, going to work, don't have time to look ahead in the morning. This is for people that are, wanting to be a little bit more proactive on their trades. But what we're looking for is just substantial moves, and we don't really see anything. There might be something that may be above water. There might be an instance where, let's say your max shares, and we'll get more into that later, but where your max shares are higher than what they should be. We'll go into that on the charts. But looking at, I don't really see anything here that's standing out on this account. We can look down a little further. Right. So this is, you just make a quick look over everything. Say, okay, so here USO, we've heard oil overnight or over the weekend is going higher. So it makes sense that like the fund, COP, XOM, they're all moving up. BP, you're seeing substantial moves in the oil market. We all know what that's called. It's called inflation. So the next thing we do, we go down through and we look from, I usually take care of these on Friday nights, but what you want to do, as soon as the market closes, anything that was on the scan for the week that you had a limit order on, not a trailing stop, a limit order on, which means your price was below the actual trading price, you want to close those out from last week. So we'll go down through here and we'll see that these are trailing stops. These stay in place. They're good forever, or until they either time out, age out, or you get into the position, comes up and hits that position. So like this Intel, so we'll close that one out. We'll cancel that. We'll come down. We'll look at CRF. Now, because this limit is below and it's actually on that 0% line, this is a pullback line, so we leave that in place. BBN, it's another pullback line. You can see the 50%. That's why we use these to differentiate between a new order and an existing. So an existing that has a limit order on it, you can leave those on. But a limit that was on the scan, which means you were trying to get into a new position, you will close those. This is part of the strategy. Okay, so NBB. Okay, so everything on that particular one is done. So now we go to the next one. We look at CAH. That's a pullback. And that would have been a new order. See, we don't have an existing order there, so we will close that. It's no longer in play. And the reason why we do this first, because it may show up on the scan again, but we'll have to take a look and see. If it was on the scan, more than likely we'll move that position or move that price to a new entry level. We come on down, TRTN, that's a pullback. INDB, it's a pullback. HIE, it's a pullback. Of course, a trailing. ACB, that's a pullback. BST, that's a pullback. All right, so that was pretty simple. We've looked it through everything. It took less than, what, 5 minutes. So now what you want to do is you want to pull up your scan. Okay, I'll drag it in here. This is for this week only, from 6/1 to, obviously it's Tuesday, so it's a 4-day week. But I figured get people adjusted and see what this actually looks like in play. So what I do with these smaller accounts that I'm educating people with, what I'll do is I'll take the even numbers first and put them in one account just to keep everything separated. We don't want to put everything all in one account. Now obviously you can use everything if you just have one account, but what we're trying to do is get as many occurrences as possible across as many accounts as possible without using up too much capital. And this is where your risk comes in. So let's change this one over and make sure we get the right one. So this one we're going to use even on. So we're just going to look at AIZ. We notice we don't have it in there, right? So what we can do is pull up a chart, and it'll be on this one. Where'd it go? And we need that. So AIZ. We're looking at that. So this is where this is one strategy. There's many strategies. I'm only going to go over the one today. What we're doing is a pullback strategy, right? So we're looking at this price is 161.15. That's the closing price. We have a max shares of 15. So we're going to annotate that on the chart. All right. So we know because this is under 100,000 in this account, that we're going to stay with the 10% rule, right? 10% of the shares is going to be 2, right? Because 1.5, you're going to just round it up. So we're going to get 2 shares. Well, in this case, we're not doing anything at this point. What we're going to do is the trailing. We're going to put alerts in on all of these. So what we're looking for is pullbacks, right? So 158.51. Get ahead of myself here. You won't see me put too many limit orders in immediately. So what we're doing is just saying, hey, if this price comes back to this point, then we're going to put a trailing stop. So this is a trailing stop strategy. And we're going to use these on both these accounts. And we've been using this on the smaller accounts under 100 because with market conditions as high as they are, we don't want to get trapped at the top. If it is the top, we don't know, but we're more than willing to get in if it has a pullback, because then we can dollar cost average our way down. So ARE, go to the next one. Just do these really quick and we'll see how fast we can get through them. So the same strategy. In this one I have the option I can just do a limit order, but because we've been into this one before, we just need to change everything over. So ARE is actually 13. So it's still going to be 1 based on the size of the account. And we're looking for 173.90 as a pullback. We can get the alert to come up. 173.90. All right. We'll go to the next one. CINF. 119.19. You can save yourself time. You don't have to put the max shares on here if you don't want to. It's really for reference purposes, but it's a lot easier when it activates. Then you don't have to go through all this. You can be quick to get in. And so CINF and then CNA. Let's highlight that. CNA, it's going to be 46.29. Now you have the option, the way we're playing this with trailing stops, you can actually, you know, if you're working and you don't have the time, all of these limit orders in this column here, what you can be doing is just targeting that for a limit order instead of a trailing. Some of our larger accounts, I mean, we're just trying to get more occurrences. So you're trying to get in and collect as much dividends as possible. If the move, everything, it's not linear. Things just don't go straight up. Things bounce around. Things go up, down. What's up, buddy? Little dog here, 5 months old. Want some attention. All right, and so CNA, so we'll go down to EGP. Now, of course, this is going to take me a little bit longer doing this because I'm doing a video, but normally you can click through these pretty quick. So 154.92. Okay, so remember, you can either do a trailing stop at this point, right, or you can do a limit order. So you could just as well, and I'll show you one of those. Hopefully we get one in here. So E, Q, R. The only reason I put these in alphabetical order here in this column here, it's just easier for me to go down through and look at everything. So it's, you know, it doesn't really make that much of a difference. So 75.04. Okay, so 75.04. Now, some of these will obviously activate unless the market just goes screaming higher. Some will come back, some will pass. Now here, looking at this, if you have under 100,000 in your account, in your portfolio, okay, that's combined, that's everything in your account. These yellow ones, do not attempt to use these because they're, if you were to take at 20%, you could do one share. All right. But if you get it, this is where your risk comes in, is how much money that you're actually putting into any one position. And we don't know. So let's go on to EXR. Just know that if it's yellow, don't touch it. Caution. So EXR, this is an old alert that's on there, so we're going to get rid of that one. And we're going to go to 145.81. Okay, we're going to come down, and good old Coke, hadn't seen that in a while. So it's at, looks like it's at all-time highs in this 6-month chart, right? I don't care about what happens over here. It really doesn't make any difference to me. 53.61. It's all about not taking losses. So you think, you know, well, I doubt that's going to come back down there, and it's like, well, then let it go. Don't think you know where the market's going to go. Don't listen to the news. Don't listen to any of that. This strategy is based strictly on occurrences and how much money that you can pull out of the market. This is an effective one for us. You see the amount of volatility here? So 145.45. Things do move in weird ways. 145.45. All right. Yeah. All right, so we're down to NSC, and we're not even 5 minutes into doing this. So if you can take 30 minutes out of your day, of course, this is only a scan with 32, but we see them up in the 150 to 180, so your chances of getting more strikes are pretty relevant. Now here's one that we're not, you know, let's take a look at the NSC. Now this is all up to you how you want to do this, but it's a pretty expensive one, so I'm still going to stick with the pullback on this. Oh, and that's another yellow, so guess what? We'll just annotate that. See how I was very hesitant to just jump on that, and there was a reason. That's because price has a lot to do with the max shares. Okay, now obviously the more money you have, the less that's going to be a problem. But you don't want to be, you know, of course, you buy 10 of those, you're looking at what, $2,800? If it goes down, you're going to lose it quick. It's very hard to manage bigger positions if you have a small account. That's the gist of it. So don't get crazy. But this is one where I would buy it on the pullback, and obviously it's only good. Well, actually, I couldn't. Let me take all that back. I can't do anything on this particular account because of the yellow. I missed that one earlier. So let's see, PCH. So keeping those rules in mind. So PCH 5856. So you can see that that one's already has already moved pre-market, right? And because it's not in our portfolio, we wouldn't see it. But the close was actually 60.20, and it's already at 61. So even if you put a limit order in, you never chase the price. It's already up. You've already missed that. It doesn't matter. Just let it go. And if it comes back and 58, 56 by the end of the week, that's fine. If not, the alert's only good, if it shows for the week. If it shows back up on the scan next week, then hey, go for it. But as it is right now, that's just, we're not worried about it. Just one of those ones you don't chase. Stick with your rules. You stick with your rules and you won't get hurt. Now here's one that's popped up, RJR. You cannot be afraid of what you're seeing here. You have to be looking at the price. So 75.50, stick to the rules. If you look at that chart, most of you are thinking, well, shit, why would I buy it up high like that? That's where you're getting into trouble, because you don't know what the high is. You don't know how high something can go. You have to know how to manage it in case it comes down and you decide to get into it. At no time do you have to take the trade. If you don't feel good about it, or it doesn't look right as far as like price action, or something has just happened in the market, like major war started or something, don't keep buying. Put everything on hold, But where are we at? Try. Yeah, 96.35. We want pullbacks in all of these cases. So try TXRH. And 99.11. I try to make these as short as possible because I know your attention span, some of you are probably already falling asleep. But this is one where you could, I don't like it. It kind of looks like that dividend amount, and we don't see another one over here. It looks like it's either semi-annual, could be an annual, you just don't know. But if I saw it was a monthly or something like that, I would probably buy the limit right there, just for the heck of it. Not for the heck of it, but because it's a better strategy. Remember, you're always targeting the dividend first. Don't think that you know where the price is going. BTR. This is where people get into trouble. It's like, well, why wouldn't you just buy the stocks that are at all-time lows? I was like, well, there's a reason why they're at all-time lows, because nobody's interested in them. Nobody wants a loser. So 53.65. Now, here's a good example. See, now this one is already in the portfolio, so we're going to put a green on it. We can't buy this, right, because the rules state we're waiting for the 50% pullback. So the only two things that can happen is it's got to come down or it's got to go up and hit the red. So WSO is not on there, so let's go to the next portfolio. Get it over into this, and we'll get our chart back up there, and we'll get this chart up. And we'll move this over a little bit. It's hard to work on one screen, but I'm not that adept at utilizing all the video recording stuff, but maybe in a year or two I will. It just takes time, don't rush it. Okay, so we're looking for a pullback, 144.69, we don't own it. 44.69. All right, and AVB. have one on there, but let's see, 258. This one's been moving a lot, high volatility. And CIT. One thing I failed to mention, and it's RMI is on here. There's only one CEF closed-end fund, and we buy those on the limit regardless. It's because they're monthly payers. That's just one rule we've kept consistent. 5158. Okay. CPT. I think everybody's probably got the idea. Thank God it's a small scan for the week. We don't know what's going to happen in the market. Therefore, we manage our portfolios. Now, if you've been following me on crypto, I still post the trades, but I don't give anything away on those because it's more of a speculation than it is a strategy. So I don't want people to speculate. I'd rather you, invest, and then, once you get a hang of that, then you can start speculating and then increase the amount of money that you're putting into your portfolios. But until that time comes, don't get the reverse done. Don't speculate with money that you need, to be a consistent income maker for you. I keep telling people like, well, wait till you're, 90 years old and then go into income producing stocks. It's like, they got it fucking backwards. Excuse my language, but I'm like, you need to have money coming in constantly all the time. That's the only way that your portfolios are going to grow. If you're just sitting there buying, Tesla stock and just holding it, what they call it, hoodling. Yeah, it's brainwashing. Let me tell you, at best. So KRC, the reason why we highlighted that, we already own it, so we're not interested in doing anything with it. 68.21. Now it looks like we're probably going to have a fairly strong opening. Doesn't mean it's going to stay that way, but we don't really care what's going on. You don't see news channel on here. I mean, I look at news, but it doesn't influence, what I'm doing because I can't verify any of it. And a lot of it is very misleading. And they're experts on manipulation in the markets through the media because they have, these quants that are out there. A lot of people doing that. They want to, go off sentiment. What's everybody feeling? Instead of just, taking profit at specific levels based on, your profit or your, what your risk level is. But I would say that your risk level ought to be fairly low. You want to take a risk when you're young. It's like, why? Why not build your portfolio? They got everybody convinced that it's, take that risk when you're young so you have all that money. Well, if they can get 1 million people to lose all their money consistently because you don't know what you're doing, you say, well, yeah, I'm just going to bet. Well, that's how you're going to lose it. You just be another lemming. There's a reason why Warren Buffett's so rich, because he didn't fall in that trap. It's very few people that fall into that trap that actually become successful with their own money management, and they have enough to live off for the rest of their life. Now here's one. I'm going to put a limit in on PSB. Okay. I'm going to put a limit, and we know, we'll just put it on this one account, and we know we can only do one, right? Because we know the size of this account is below 100,000. So PSB, it shows 12. So we'll add that commentary. And we're done there. Oh, I need to put in the limit price. PSB, we want 154.96. Put a limit. We want to rate on that price. There's no particular, there's no magic to this. Okay, we're just using numbers. We're willing to buy that at 154.96. Okay, and we know that there's a dividend coming up shortly. So we're not buying it specifically for that reason, but what we're doing is we're trying to make another occurrence. This one just has, you know, where the price is versus where it was recently. Okay, I'm looking at the top of this and I'm looking at the top of this. These are just resistance lines. So PSB, and then, okay, here's RMI. We know we're going to buy this rate on the limit. Oh, well, we already own it. So, but that would be a case where we just buy it at the 22.91. So we'll put RMI. Okay, and I'll go down here, TRB, Travelers Insurance. I know a few of these by name, but the majority could care less. Yeah, I say the majority. I've been doing this long enough to know what most of them are. 156.18 limit or alert. Yeah, if I've gone too fast for anybody, just go back and rewatch it. I mean, this is not rocket science. But where you're going to excel is when you start to manage your money correctly. 45.16 and never go too big. I know I've had, you know, people that I've taught in the past that go max shares. And I'm like, well, you've blown that strategy up out of the gate, right? So don't do that. Follow it for a while. Just trade it on paper if you're not comfortable with it. You know, learn it, get a better understanding for what's actually going on. WHF. $14.21. See, now here's one that you can just buy, right? So we're just going to buy this one. And what's the max shares? 123. 123. So we can buy 12 of those, right? And it's actually a quarterly pair, which is interesting. So we can buy 12 of those, right? 10%. And I'll limit that at 1563. Okay. So we have, what, 3 orders that are going to activate, hopefully, on the limit. I mean, they could always change, jump up. If the price opens below, you're going to get it at a better price. That's just the way it works. But that's it for the scan for this week. So each week we put out one of these scans. Normally we charge about $5 per week, depending on, you know, what you want. But yeah, we'll go into more in depth on the different strategies in future videos. But you know, we have ones that, you know, you can get in just looking at specific dividend amounts, especially when you get into these larger, the larger scans. The yield is basically, this can fool people as well. You know, the yield is not something that you need to target. Dividends are more important. We go for a minimum $1.20 per year per share. Okay, anything below that, I mean, your portfolios can expand very quickly. That's enough to make, you know, 15 to 25% per year if you trade it consistently. And the reason why this strategy works more than anything else right now is because we don't have trading fees, you know, on most of your platforms. It's perfect for equities, CEFs, and things like that. So I hope this helps. If you have any questions, feel free to, you know, give me a shout. I'm on Twitter, T1 Recon Rider, Dividend Collection Team, Gmail, T1ReconRider@gmail.com. But anyways, that's it for this morning's. Just let me know if I can help, and we'll go from there. So have a great day.